Well, we are having this very special chat with Vineet Sambre of DSP Mutual Fund. Vineet, of course, has got assumed a new role, but his reputation in the market is of being a ace mid cap and small cap specialist over the cycles, who has built a fund, DSP Small Cap Fund, and of course has seen different phases of evolution of small cap and mid cap. So we are having this discussion around his fund and as a category, the small cap space. Vineet, thank you very much for your time.
Thank you. I'm very glad to be here on your show. Thank you very much for
Vineet, let me start with the category first. The last 7-8 months has been extremely brutal for the category after a good 2-3 year period. But the point is that bulk of the retail or HNI money actually came in these last 1 year. What has your observation been of the corrective phase which you have seen last 6-8 months right now?
So, to us, we were slightly cautious on this category starting 2017, and which is where we had also shut our inflows into our small cap fund, which was erstwhile known as DSP BlackRock Micro Cap Fund. Now it is known as DSP Small Cap Fund. And basically, it was an indication that the category was getting expensive. The number of opportunities were shrinking, and the money flow is also being massive in that category, which was also an indication that investors were looking at the historical returns and getting slightly more skewed towards a particular asset, which is a small cap. So, which was also giving signals of it becoming more riskier from the investment viewpoint. So, for us, we sort of shut the inflows into the fund, then giving indication to investors that we consider this to be expensive. And we felt that the category needs to correct down some bit, so that it becomes more reasonable in terms of valuations for us to again start looking at it. And this is what we started seeing starting 2018 beginning, whereas the large cap, the overall markets have done well and they have moved up some 10-11%, but we have the small cap specifically coming off almost about 12 to 15%. Whereas within this fall we have some stocks seeing much more pressure going down by as high as 40, 50, 60%. What has happened in the bargain is that the category has lost some bit of that hyper valuation range what it was trading at. It has come down to slightly more reasonable level, and which is where we have taken a decision to reopen our small cap fund, DSP Small Cap Fund, and we are reopening it on the SIP and STP basis right now. We are still not allowing the lump sum right.
Right. So, is that is it fair to estimate that you have started witnessing the that froth is relatively lower now or clean in certain areas, and it makes sense to selectively start looking at this space once again? Is that also
Surely. So, the froth is not fully cleaned, I would say. It is cleaned somewhat, but it is a good starting point for all of us, because as an investor one would never be able to always identify the lowest price point. Our belief is that given the macroeconomic headwinds, the volatility may continue for a while, and that is the opportunities basket for us. So, we are going to look at this volatility as an opportunity, and we are going to take a decision of investing into companies which we feel are attractive in terms of the business and also reasonable in terms of the valuations.
Right. Vineet, you have been working in this category for a very long period of time. You have seen small mid caps through the cycles. Lately, we have observed in the market interest to work in this area by value investors, big HNIs has gone exceptionally high over the last 12-15 months or couple of years. For you as a practitioner, what are the areas you would tell our viewers and investors out there that they should focus adequately on when working to find potential multi-baggers, as they say, in mid and small, to quality of management, to quality of earnings, the promises which get built into the stories, all these factors, how would you weigh?
So, if I were to look at our own philosophy, we have really followed a very strong fundamental approach towards investment, and what we really look at in these companies is a very strong and solid management, the top quality management, which is, I think, the most important factor, beyond which comes the business, the outlook for the business, and the other valuation parameters. So, within these three frame, there are many more detailed due diligence exercise which we carry out, but by and large I think these are the most important pillars which I think investors should focus on. We believe that every company has a value, and we try to focus on to understand what is the value of that business, what is the value of that franchise which the management is building. And once we get confidence and conviction about the value of a business or the future value of that business, the price variation is an opportunity. So whenever we see price correction taking place during such volatile times, for us the value doesn't tend to get impacted as much as the price tends to get impacted, and hence for us we take these correction as an opportune time. And there are phases where the prices move up much beyond their likely valuation in future. So that's the time we also take decision to sort of get rid of or book some profit into those names. So that's how we've been sort of looking at that category.
I was just analyzing the composition of your fund, and I found that there were quite a lot of chemical companies which actually stay there. And lately we've seen a lot of macroeconomic changes in China, pollution norms, and the general commentary from a lot of chemical management we speak to on our channel that the outlook has actually relatively improved. What is your hypothesis to that specialty chemical space that you have quite a lot of names in the top 10-15 names there?
You are absolutely right. We are quite overweight in that category, and our belief is that these companies in the last few years have actually come up quite well, not only in terms of the product basket what they are catering to, they are specialized in their own ways across each companies. Also, like you said, we also sense that there is a big opportunity which is really brewing up, and that's to do with the China going out of the market because of their pollution related requirements, and that is in a way leading to a lot of inquiries coming on to the Indian companies to add capacities to grow. And at the same time, the Indian companies have also decided to put in a lot of capex. So if we look at one number, which is the capital expense which these set of companies have done in the last 2 years, it actually is combined. The last 2 years capex is much more than the last 5-7 years capex, which is an indication of the outlook which the management of these companies are sort of looking towards. And if I were to combine all these factors, we believe that the outlook for that set of companies is going to be much better off than what they are today. The growth will be much better off than what they are today, given the kind of capex which they have done. So we continue to remain positive on that segment.
And of course, the prices of that basket has also shrunk in line with the overall category.
They have been relatively less impacted, but nonetheless, I think from the highs, some of them have seen some bit of price cuts.
Right. The other pocket which I found, again repeated names, was the textile space, the small textile space, whether it's catering to the domestic market, some names more export oriented. What is your thought process to those kind of spaces?
The domestic plays are more to do with the domestic consumption theme. I think as I mentioned, we believe that India is a large consumer based, consumption driven economy. Of our GDP, almost 60% is linked to the consumption space. And we see the domestic branded players to be driven by this broader consumption theme. So that's one area of investable segment which we are looking at right now. There is one more segment which is the, as you said, the home textile export oriented companies. There we see Indian companies are gaining competitive advantage over China because of the cost competitiveness, because of the cotton availability in India. We are one of the largest cotton growers of the world. So I think those competitive edges is definitely going to make them gain more and more market in the international, in the developed world, and where we see the demand likely to do not very high growth but decent rate of growth. So we have backed some of the decent management here, some of the leaders in their own space, because we believe that the opportunity size is big, and these companies will continue to grow because of the strength what they have displayed in the past.
And lastly, want to understand your thought process on some of the mid and small NBFCs which you have in your portfolio, because there was a time, couple of 2-3 years back, that there was everything which was an NBFC was running up. Then they went sideways, and now people are not extremely hot on it, but are citing reasons like rise in bond yields, etc., to stay away. How are you analyzing the mid-cap NBFC space right now?
So I think in the short term, because of the rising interest rate, definitely there will be the rising cost for these NBFCs, and that may have some bearing on the spreads. But broadly, if we have to look at the long term trend of these NBFCs, what we have seen is that these NBFCs have identified their niches. They have grown within those niches. The opportunity is still very wide, and the interest rate cycle will keep behaving or keep having their own cycles, sometimes high, sometimes low. But these NBFCs have displayed strength during in the last 10 years, and have also maintained their asset quality quite well. So we get excited when we look at the long term trends, and given the opportunity size, we have backed them up. There may be a phase where they may see spreads compression in the next 1 year or so, but we have to look beyond this next 5-7 months, and then we hence as long term investors, we continue to back some of these good NBFCs.
All right, Vineet, thank you so much for your time. Always wonderful chatting with you.
Thank you very much.
Thank you.